ridiculous. It's very sad at the same time, because I was talking to a business owner, and they were telling me they own a farm and they have about 200 employees. And they were telling me that right now, with all the levies that are being charged and all that, especially the housing fund, NHIF has been increased, and SSF has been increased, and all that. It's going to be eating into their profits. So they are making profit of about 5 billion, give or take, on a yearly basis. Now it's going to be taking about 3 billion out of that for the levies only. Yeah. So it's making them, it has reduced their profitability. So in the next 2 years, if they don't increase their produce and their sales, it means that if they remain constant, it means that given that they have reduced their profitability, they might have to start letting people go. Yeah. And it's already happening. We are at that point where every business owner is feeling the pinch, because if the status quo remains, it means that you're not making as much money as you used to. Yeah. And unfortunately, it's happening to it's not just the business owner, it's even the individual levels. Yeah. We are contributing about 47% of our contributions are going into taxes and levies at the moment. So if you earn 100,000, 63,000 shillings is what you can use at the moment. That is before yesterday. I'm sorry. Before yesterday, everything was introduced. A whole new level, levies was introduced. So it gets to that point where you ask yourself, I am asking myself, when is enough is enough? And I'm glad that we're joined by two tax experts today. We have Farhia. She is a beautiful 29-year-old with a lot of knowledge, and she is an advocate of the High Court and also founder of Holby Training. Yeah. And we have Samuel. Samuel is partner. Yes. At TaxWise Consulting as well. And they have so much wealth of knowledge when it comes to taxation that I don't have. I say we are going to be talking about taxation. I am here to learn as well. So I'm going to be to hand over. Actually, we have a few questions that we have. So we are not going to do a presentation. We are going to be doing the questions that were asked, and you can also type in your questions in the chat box. We shall be handling them as they go. And then we are going to have the discussion between Farhia, and then maybe Sam can add on, or Sam, the question goes to you, and then maybe Farhia can add on. Yes. Karibuni, I think you should introduce yourselves. I have done not a very good job introducing you, but I think you should be introducing yourselves. Over to you, Farhia. Ladies first. Okay.
Okay, so thank you so much for joining in. My name is Farhia Jamam. I'm a lawyer by profession. I specialize in different areas of law, but tax is my bread and butter. I love tax and anything to do with tax laws. So apart from being a lawyer, I am also a founder of 4 other companies. One of them is Holby, there's Istithmar. We have different non-profit and profit organizations. And just as Rose said, with the high taxes, you need to survive, and you need to make sure that you're still living and surviving. And so that's what we're doing. I'm also a lecturer at KESRA, Kenya Revenue Authority, the college branch, teaching aspects law and business law here. So I hope to have a very fruitful discussion with you, and you can ask the questions. I know tax is becoming a controversial topic in Kenya, but we're here to answer the questions and see how can we all survive here.
Thank you so much. Sam, over to you.
Thank you. My name is Samuel Njoroge. I'm a tax partner at TaxWise Africa Consulting LLP. We're a tax firm that was set up in 2012 to specialize in tax advisory, away from conflicts, if I can call them that way, of audit and legal firms, so that now we concentrate on only tax. We are able to not only deal with your compliance issues, which is basically the base level, but be able to structure and be able to plan and also get into tax controversy, where we are able to basically ensure that you pay the least amount of taxes, but within the law. There's no tax evasion. There's no actually even tax avoidance. It's actually tax planning, that you're reducing the tax that you should be paying to the minimum based on what is provided in law. As we continued with providing these tax services, other firms have come up. We had to set up an audit firm because clients requested for it. So we set up Sterling Africa to undertake BPO and audit, BPO meaning business process outsourcing. And last year, we launched an online platform for individuals and businesses, so for the retail market, where we can offer you all the tax services that you need. So from tax planning to tax compliance, PIN registration, everything that you can go from a tax and immigration perspective, we have it on a platform called easytax.co.ke. So you can find all that there. Yes, and happy to be here. This is my second with Vasili, and looking forward to the discussion.
Thank you so much. Thank you so much, Farhia and Sam. Let me dive into it. There are a few questions that were asked, but let's first see where we can start. I think the one question that is on every business mind right now is the teams, the e-teams, and how it's being implemented. I think with that, we can also talk about what happened this week. They said even if you are not registered for VAT, you still need, as a business, you still need to be issuing your invoices via e-teams. So here comes the question. If you have deployed teams, if you have deployed a teams, and do you need to switch or immigrate to e-teams? Is it mandatory? And we can tie it now to the business is not registered for VAT are also supposed to be using the e-teams system. Please expound on how they can be able to be compliant. Sam?
Okay, if you wanted to take it, you can start and then I add on.
Okay. So let me just, for every business right now, they're wondering about what e-teams is, or maybe they've been using some hardware solutions. So the current e-teams just stands for the tax invoice management system. So it was a device that was supposed to solve your VAT kind of registration and ensuring that you are compliant with the law that states that you have to comply with transmitting your VAT returns. So the VAT registered businesses require the electronic tax register, which is the ETR machine. So Teams is just an upgrade of this software that used to be there before, and it provides now that convenience for the taxpayers, because part of us, ensuring that revenue is collected as a government, the e-teams was suggested to ensure that it is a very simple, accessible, and technology is coming to change most of our businesses. So of course, KRA is also upgrading their system. So e-teams will be that electronic device that will be including the computers in the mobile apps. So most of the businesses were going to KRA offices to ensure that you have installed the e-teams. They give you a configuration, and the configuration was being done on our laptops, whichever system that you wanted to use. Why is it of benefit to you? One, e-teams was to reduce your cost of compliance for VAT registered businesses. So for those who are VAT registered, they had to use e-teams and ensure that that integration is happening in the businesses, because it is giving you a real-time way of just ensuring your invoice are transmitted and providing accuracy in the tax invoice. Why did KRA introduce that? It was to ensure that we have a seamless process of every business ensuring that they've already filed their VAT on time, and also the accuracy. They wanted to know that whatever invoice you're keying in, are you keying in the right accurate tax invoice and declaring the right amount, so that they can do reconciliation between what you filed as your returns and what you paid for your returns. So this will eliminate a bit of the need of using multiple hardware, like ensuring that you have another machine which you have to purchase. It will make your work easier. But then also you need to be very careful, because if you have not been filing your VAT and your invoices are not up to standard, then that brings a problem. So let me give it to Sam, maybe to add on why this e-Teams is important and why they need it.
Okay, so
Sam, before you answer, maybe you can also expound on how a business can be compliant, like from the beginning to the end.
Okay.
Yeah.
So e-Teams, like Farhia has said, is it's, let's say, 2.0 of ETRs. It's basically a development to make sure that KRA, basically here the main thing, yes, businesses will get an advantage in terms of making sure that you have a record, but the main thing was taxation of the informal sector. That what you'll find is that informal sector, you have less than 50% compliance levels as reported by KRA. So because of that, e-Teams is now automated. That once it's you have it on the machine, once you issue any invoice, that data is collected by KRA in real time. So they're able to see how much revenues you declare. The Teams device it's the hardware version of it. Although it had one or two issues. One is restriction in terms of the value, because if you raised an invoice of more than 10 million, it was capped at just 1 shillings to 10 million. So you could not raise a 10 million invoice and above. And secondly, if you had a Wi-Fi connection issue, the code was delaying being reflected on the KRA side. So if we issue an invoice to a client, what would happen is that once the client gets that invoice and they're trying to claim it as part of their input VAT, then it would give an error, and that input claim will not be allowed. The reason why KRA has brought this up is because of some time back, you remember about the missing trader, where people would claim input VAT, but there was no supplies. And there was one or two cases that investigation and enforcement took to court with billions of VAT in play. So what is the benefit? So we can clearly see what is the benefit for the tax authority, that with more VAT compliance, of course, the revenues go up. And we'll be able to see that on a year-by-year basis on how KRA reporting. But for businesses, what is your benefit? The benefit, it goes to simplification, like I stated, like Farhia stated, but as well as proper record keeping. Now, in terms of making sure that you're compliant, anyone who's vertable or who is making sales of above 5 million, where you're supposed to be registered for vertable supplies, then you should ideally by now have already been registered and you've gotten your e-Teams, which is free and it's installed in your device. So that's from a compliance perspective. So the second option or the second step that KRA has taken is to state, well, now in terms of VAT, it's been successful, that it has removed all these missing trader cases where people are inflating their input VAT. Now, why don't we check also from a corporate tax perspective to ensure that all the expenses that are claimed by a business have a proper e-Teams invoice. So that's why they proceeded. The amendment was in the Finance Act 2023, and from January 2024, ideally, all costs that, or legally, all costs that you're going to claim should be supported by e-teams. However, there is a caveat there because not all costs can be on e-teams. Payroll, we're talking about, what are they called? Payroll costs, some petty cash amounts. If you make provisions for your legal fees, for your tax fees, for your advisors fees, basically audit fees, those ones are not going to appear on e-teams. So it goes back to section 15 and 16 of expenses that are allowable and deductible that are being incurred fully for the business. So how KRA is going to bridge that will be interesting to see from next year. However, from a business perspective, it does help you, because if you say that one of the things that we can discuss here and which you need to build up on before you go to tax planning is basically record keeping. All businesses in Kenya, if we are able to keep our records properly, we'll be able to demonstrate that there's no one who's basically hiding from paying taxes, because the fact of the matter is not a lot of business are profitable, and most big startups or most businesses, you turn a profit or you break even in your third year if you're able to get there. So from a record perspective, it's not, you should not basically fight it or see as a way for KRA to get at you. I believe with more compliance and people utilizing e-teams, it will be quite clear to KRA that indeed there's no non-payment. It's basically business is struggling, the economy is quite tough, and that will be demonstrated in 2 or 3 years to come.
Okay, nice one. Let me go back to a question that has been asked on the chat so that we can bring it into perspective. What are those taxes and levies that a business is supposed to be aware of? Or rather, before you even start your... So there's a business that is already existing. There's someone who's thinking of a startup who's probably here with us. What are those taxes and levies they're supposed to be aware of? So that they can be tax compliant from the beginning, before they start record keeping. I'm taking notes. Yes.
So one of the things that every business, before they start a business, that they need to be aware of is, one, if you're gonna hire employees, it means the tax obligation of payee will always be on your record. So you need to know, am I hiring employees or consultants? If you're hiring employees, you'll have to be paying for payee. And right now you have the statutory requirements such as NHIF, NSSF, and now we have housing levy. So these are statutory requirements that you need to pay for your employees. So if you're paying yourself as a director of the company, you're paying yourself a salary. If you have employees that you're paying a salary, you need to make sure you pay them their salary, you deduct the tax obligation, you deduct all the statutory requirements. Statutory requirements I've just stated is NHIF, NSSF, now we have housing levy, all those deductions. So you need to know, within this amount of salary that I pay for 20,000, these are the obligations. With this 100,000, if I'm paying any employee of 100,000, these are the obligations. So that is the first requirement. Then second, you need to know, once you start a company, there's a corporate tax. So the corporation tax is taxed on every business. So remember, the corporation tax, as Samuel has just said right now, when you're starting a business, the government already knows, and every business around the world, the first 3 years, they might not survive. So they might collapse within the first 3 years. So you need to know that within these first 3 years, you need to keep proper records. And before we look at the levy, before you start the Company Act already says that you need to keep your financial records. So your financial records have to be kept for 5 years. So right now it might be extended. So keep your financial records, and financial records is the invoices, the receipts, any payments that you have paid, your bank statements. So those are the things KRA will come in to look at, but it's already a requirement, not only for tax purposes, it's a requirement under the Companies Act. The other levy that you need to think about is, now if you've hired consultants, so you decided you don't want to have employment model in your business, but a consultancy model. So the consultancy, you will have to be paying withholding taxes. Now in withholding taxes, you will be charged at 5%. I'm not sure if tomorrow we might wake up and it increases, but right now it's at 5%. So you know that every consultant who are paid above 24,000, then you have to declare the 5% out of what you've paid. So maybe you've paid your employee or consultant 30,000, or you've paid 28,000. So you'll say 5% of that, and then you'll go to the system and then file that withholding tax. So I'll give a chance to Sam to continue with, there's so many levies, we're yet to calculate all of them, but maybe someone can take over.
Okay, thanks, Farhia. So for any business person, especially if you're looking at setting up a business, even before you set up, the first thing that you need to look at is which is the best structure for me. What is the best entity that I should be incorporating? And I'll give an example. Let's assume we have 3 entrepreneurs. One is going into services, one is going into products, and one is going into schools, education purposes. So if you look at those 3 entities, most of the time people are going to set up a company direct, but it's not the best structure for across board. Why? Let's start with the service business. A service business, most likely, you're going to be the one who's a key or driving the sales or driving the business. So the best structure for you is not a company. The best structure is a limited liability partnership. The reason being that for an LLP, the limited liability partnership, your profits are being taxed on the entity once. That means that it will be taxed at 30%, graduated scale of it 30%, and then there's not going to be any distribution tax. If you set up a company and you make a profit, remember it's going to have 30% of it is going to be taken, and then after that you're going to have distribution or dividends to pay you, and then withholding tax is applicable. So your effective taxation rate is high. Secondly, if it's products, then the company might be more suited, especially if you're looking at your long-term growth plan, and maybe you're looking at listing so that at the stock exchange, so that you issue more shares. For an educational institution, then you go to an entity that is either a trust or a company that is limited by guarantee, because there's an exemption for public good entities. So you're talking about education, you're talking about health. So the Nairobi hospitals of this world, the Strathmore of this world will be structured as a company limited by guarantee, because there's a corporate tax exemption on all their earnings, so long as they plow back all the profits back to the business. So after you've decided which structure you're going to have, then now these what are the tax implications that you're going to have? So let's start at corporate tax versus the turnover tax. So turnover tax is, in my opinion, quite punitive, because it takes 3% of your top line. So without claiming any expenses, 3% is already gone. So if you're in a business where you're making very thin margins, then forget about turnover tax. Don't go for it. It's there to simplify in terms of reporting, That's the main push, and the threshold is between 1 million all the way to 20 million. However, turnover tax for in my review, and we can back it up with simulations and write-ups, it will not be good for business, because most of the time you're bootstrapping your business, you're incurring a lot of expenses, you're incurring maybe some interest to because you've gotten a loan. So for the past maybe even 3 years, you're not going to have a profit that will be taxable. So it will be best option to just opt out of turnover tax and go with corporate tax. The only thing is, the only catch with corporate tax again is record keeping. But if you weigh the two, why would you want to pay taxes from your first year? Well, you could keep records and not pay taxes for a period of time until you turn a profit, which is how it should be. The second one is now on employees. If you're going to have employees, Farhia has talked about PAYE, has talked about all the levies. She's also talked about consultancy model. Here you need to be quite careful. There's what is called consultants versus employees risk. So if you have a business and you employ or convert a lot of your employees to be consultants, and most businesses are going that route so that to avoid having to pay PAYE and all these levies. KRA is just waiting for you. That one is for sure. And in 2 or 3 years, you're going to have a lot of disputes relating to employee versus consultant. We're already starting to see that. So you need to be quite careful. There's what is called the common law MICE test. So mutual obligation, integration, control, and equipment. So if it's an employee, I have to give them work. I have staff here that I've given work, they have to accept. From a consultant, I don't have to accept work. It's based on the scope. And if you don't agree on terms, I work. Integration is that the employee is integrated in all aspects of the business. An employee will either with their access card, but will have access to all aspects or all areas of the company. We'll have a cover, we'll have pension and such, as opposed to a consultant. Most likely when I go to a client, I'll be put in a boardroom. That's the only access point. And I don't have any benefits apart from my salary. Apart from my fee. Then there's control. An employee will be controlled. You're supposed to report at 8 and go home at 4:30 with 1 hour lunch break, for example. So there's specific hours. Even if you're working from home, you have to log in so that now you're seen on the system and such things. But for a consultant, so long as I can deliver my scope, I can work from anywhere, and it's just a matter of what are the contract terms. Then the last one is on equipment. As an employee, tools of trade are provided. But for a consultant, I come with my own tools of trade. So whether it's a laptop and such items to be able to deliver what the client is asking for. These other items that you looked at in terms of frequency of payment, most likely will be paid once off every quarter, as opposed to an employee who's regular. But it's based on mostly evidence, but MICE test is a very nice way of making sure that you verify and ensure, because definitely there'll be disputes coming in from that side. So after payroll taxes, now for consultants, then you're paying them withholding tax. Apart from consultants, most likely you're going to have other professional fees, lawyers, tax advisors and such, which you're going to have withholding tax of 5% locally, and then 20% if you're paying a non-resident who does not have a double taxation agreement. Then you're going to have interest payments, royalty payments, all those have withholding taxes. VAT, if you have a threshold of up to 5 million for taxable services or taxable supplies, goods and services. And if you're importing, there's going to be customs duties, there's excise, depending on local, whatever you're supplying, there's excise duty on various services that are there, for example, financial services, betting as well. Then if we go to, so we've talked about importation. If you have vehicles that you're utilizing for your business, there's advanced tax that you pay at the beginning of the year. which you claim as a relief. So it's a myriad of taxes depending on which line that you're going for. But again, I'll end every presentation or every comment that I make with one thing: record keeping. If you keep proper records, you'll be able to beat or be able to demonstrate that to a certain extent that you're tax compliant.
Okay. Wow. Okay. I hope you're taking notes, because I think 1 hour will not be enough to cover everything, but I think it's a continuous education that we have. So it's very good that we started this a few months ago, and we are learning. I know for sure I was one of the people last month in September who asked KRA whether I can change all my employees to consultants, and then some is here telling us they've already started getting conflicts and all that, and I'm like, now there's no escape for us. Totally.
It depends on the contract terms. There is the way you structure it is quite important, and you need to be careful. Yeah. So you need to speak to an advisor, please. Let them walk you through it. And if you feel that you're not yet satisfied, you can walk to KRA. There's the private ruling mechanism where you make an application and they give you a binding ruling on the transactions that you're making. So if they agree that your staff or the person providing services to you is consultant and they put it in writing, then they cannot go back on it. If they give you a ruling that is contrary to what you believed or you interpreted the law, it's not binding on the taxpayer, and the taxpayer can challenge. You can challenge that ruling that has been given.
Okay.
But I guess the ones that have already not started or are in the process of that registration process, you have a leeway. You can now structure your business on a consultancy model. And the way Sam has said, the law is very clear. The law checks out very specific things. Does this person work for you 8 to 5? Do they have? Do you give them equipment? How long are they with you? So sometimes you might hire a consultant and then the consultant is staying with you 5 years or 4 years. That's not a consultant, that's an employee. So KRA is watching those threshold. And so you need to make sure that whatever contracts that you're writing are aligned if you want the consultancy model. But if then employment is the way. Just pay the
You just pay the levies and all the taxes that are there.
Yeah.
Okay. And you said, just to be clear, for anybody who earns more than 24,000 shillings, you're supposed to be paying all the statutory deductions.
I was talking about the consultancy model. So above 24,000, withholding tax applies. If it's below 24,000, then now withholding tax won't apply. So you need to fund yourself within the.
In that case, you can pay someone 5 times in a month, as long as it's. No, I'm just playing. I am playing. I am.
One of the quick ways, maybe if someone is not, is just on the 24 and the 30 element. Remember, withholding tax is on the service element, the professional.
Yeah.
Most likely when you're providing professional fee, there's going to be disbursements, basically other costs. Although there's change in law that is coming and all those items are going to be included. But you can structure your billing so that now the fee is lower than the threshold. Similar for employees. So, for example, if an employee is earning 24,000, you've talked about someone who is running a farm. There's other non-taxable benefits that are applicable. So, for example, meals. So instead of giving someone, paying them wages or giving them fee, which they're going to go and consume for food, for example, for lunch, In the alternative, I've seen contractors, what they do is just they sign up with a kibanda or whoever is providing meals close to their site. And then each employee is given 4,000 per month. So every week, the person who's running the food business will raise the billing, and it's paid. So instead of paying this person maybe 26,000, now you pay them 2,000 since you've taken out the 4,000 that they consumed. They're happy, they've gotten their lunch, and they don't get a haircut in terms of tax. So other non-taxable benefits would apply. For a business as well, if you look at it, if you're running your own business, and especially in the initial stages, mileage is a big item. You're going everywhere to see your clients. And it's a good thing that in the Finance Act 2023, they've introduced it and specifically stated it in terms of it being, you can claim it under AA rates. So you just get, you register to be part of AA, or if you can get the booklet so that you see the rates that are applicable depending on your vehicle, and you claim those expenses. If all businesses, I go back to that if all businesses claim every expense that they incur, because when you meet a client going there and coming back, if you're working from home, then part of your of the expenses that you incur in both rent and utilities should be assigned to the business and such. You'll be able to reduce any profitable or any profits that you think are there. But again, you need to have proper documentation. That's the hill I'll die on. Before we even go to tax planning, the basic level is record keeping. If you have that, hard cases, and it's not only for small businesses. I've had cases where for international businesses, records are not kept well, as Farhia has stated, and an audit is raised, and it's billions of shillings. And when you come to fight or defend the client, we don't have proper documentation. It takes time for those documentation either to be recreated from people's emails or to mine someone left, and then we don't give a proper handover. You don't have proper reconciliations. So we end up spending so much time doing that while we could have been reviewing the law and applying it properly so that now you could defend. So it's not just small businesses when it comes to record keeping. Before we talk about any tax planning, compliance, record keeping, reconciliations on an yearly basis, that we need to do.
So the word for today is record keeping. Yes. Farhia, one of our speakers, is about to leave. I would want her to answer one question though, Farhia, before you go. What size of budget would a startup need to hire services of a tax consultant to set up the business up? For you, as for Holby, or for you, Farhia, before someone hires you, wakuwe na budget ya pesa ngapi? How expensive are you?
For a startup, what we do with the startups, we give them a retainer budget of 30 to 50K, so that because startups are at the startup level, meaning they're starting their business and all that. So we normally give them a retainer fee for the whole year so that we can just be guiding you and advising. And you see, the way Sam is saying, most of the startups have one problem. They don't know what records to keep, what taxes apply to their business. So we walk the journey with you in Holby. So Holby, we start training you. These are the taxes that will apply to your business. Then after that, we do consultancy for a period of 3 to 4 months in the whole year and help you set up the right documentation, right papers, get accountants to guide you on a few things, and then train you on what exactly you will need. So at least have a budget of 30 to 50K. I wouldn't say that because the question was a startup. According me as a tax advocate, most of my cases are ranging from 300K to 1 million.
Nyamazia hapo.
That's if you rather work with Samuel who's guiding you on the accounting
Before
and
you get
by the
before
time
you
you
get
pitch to me, it means your company is in big trouble with KRA, and I am trying to solve and fight KRA for you. So tafadhali work with accountants and auditors before you come to me.
All right. How can people reach you? You can text your email on the chat box. And then thank you so much for joining us. We shall continue the questions with Sam.
Okay.
Asante sana. Thank you so much.
So much.
All right. All right. Sam, we go back to, I think we have talked about the compliance or what we need to as a business, what you need to do so that you can be compliant, the kind of taxation that we have. I think you have said when it comes to tax planning, the first thing that you should do actually is just have all the records. And that is the word for today, record keeping. Then I have a few more questions that came in during when we sent out the invite for the webinar. I'm going to read them out and you tell me how we're going to answer. There's a question on, I think this one has been answered in so many words earlier. Any business, a business that has a revenue between 1 million but less than 3 million, what kind of tax are they required to pay? How much and how do they do it? Let me read that one and another one. What is tax transfer pricing? And then what is low interest benefits? I think those three can help us. Yes.
Okay, let's start with the first one. Someone who's earning income between 1 million to 3 million. So for that will be either corporate tax or turnover tax. As I stated, I'm not a fan of turnover tax because turnover tax takes from the gross level. If your business, you have to know your business as an entrepreneur, of course. So if your business is going to make more than 3% in terms of net margins, and when I say net margins is after you've taken out, you've paid yourself, and you've also paid all the taxes that will be applicable, then you can go for turnover tax. But if, and most businesses, especially small businesses, unless your margins are maybe more than 15%, whatever is the net margin you're making, turnover tax does not make sense. It was implemented for simplification that anyone with between 1 million to 20 million, you fall within turnover tax and you pay 3% of your top line, all of your revenues, and it's payable by 20th after your year end. So if your year end is December, then by 20th of January, you need to remit. In terms of payment, it's through iTax. Once you get in there, you will be able to generate a payment registration number, and then with that, you can be able to remit the taxes to tax authority. However, you need to go back to your margins and make sure that you're making possibly more than 15% net, not gross, net margins. If you do not want to fall within turnover tax, you can again opt out and move out of the turnover tax regime and be able to be at corporate tax. So corporate tax is the normal one that you're going to prepare your profit and loss. You say this is the revenues that are made, this is the direct cost. Then you have your gross profit. Then you put all your other expenses, administration, distribution, whichever other costs that you've incurred, you get and then you put your financing costs before you get your net profit, which is taxable. Like I stated, most businesses, if you have proper records, unless your margins are quite astronomical from the beginning, then first year, second year, most likely you're not going to be in a profit-making position. So you're not going to pay any corporate. So that's for the business between 1 to 3 million. The second question was on TP. I'll skip that so that I can do liquidity fast. The last one was on low interest benefit. So the low interest benefit falls within if your employer gives you a loan that is lower than what the prescribed rate by the commissioner is. The prescribed rate falls within fringe benefit tax, FBT. So KRA will quarterly give what are the FBT rates. I believe the rate at the moment is 9%. But I could be wrong. I've not confirmed that. So if you're working with 9% as the rate that the commissioner has prescribed, and then maybe your employer gives you a loan of what, at 5%. So the difference will be taxed on the business. So the 4% will be a disallowable expense, and it will be charged on the business basically. So you'll have 30% on the business, not on.
Okay.
So let's transfer pricing.
Yes.
Transfer pricing talks about cross-border trade in Kenya when you deal with a related party. So if you have an entity that is on one time sitting in Kenya, and so you have a related party that is sitting offshore or in a special jurisdiction. When I say this is special economic zones or EPZ, who pay lower tax rates as opposed to the normal jurisdiction. So if you transact with your related parties, there is what is called transfer price. So let's take, for example, let's assume Vasili Africa has an entity in Mauritius, and you have Vasili Africa also in Kenya. To be able to reduce the tax in Kenya, one of the ways would be that Vasili Mauritius bills a lot of management fees to the Kenyan entity. That way, most of the revenues or most of the profits are reported in Mauritius, where the tax rate will be coming to around 3%, as opposed to paying it at 30% in Kenya. So you can see the motivation of why related parties sitting in different jurisdictions would want to move profits per se. So transfer pricing laws come in and say that any transaction between related parties have to be at arm's length. Basically, they have to be at market rates. What Vasili Africa would bill to an independent party is what would be applicable to a transaction with their related party. And there are various mechanisms of confirming that. So in Kenya, you do have to document a transfer pricing policy and demonstrate that not only was the transaction at arm's length, that indeed it was at market rates, but an actual service was provided or an actual transaction happened. It's not mythical, it's actual, and a transaction has happened. And you're not, there's no tax evasion or tax avoidance. So various ways of demonstrating that, there's various methods. So transfer pricing would be another 2-3 trainings just to speak about it in quite depth. But in simpler terms, is to make sure that related parties operate as if they are transacting with independent parties. Make sure that it's at market rates.
Okay, I think it brings us to a question that was asked on the chat group. If one is able to claim an expense from January 2024, it must be ETIMS compliant. How about invoices on import of services where one computes reverse VAT? Will a taxpayer be able to claim them?
So there's, like I stated, it's going to be interesting how KRA is going to deal with this, because remember, you have to look at the law in whole, not in part. Yes, there's ETIMS, and it's stating that if you're providing or you've claimed any expenses, then it has to be backed up by proper ETIMS. But those expenses, importation, provisions, payroll costs, petty cash costs that are not most likely going to be supported by e-teams. However, it's expenses that have been wholly and exclusively incurred for the generation of taxable income. So long as you're able to demonstrate that, that's section 15 and 16 of our Income Tax Act, which provides what are those expenses that you're supposed to claim and what are those expenses that you're not supposed to claim. So in simplification, very simplified way. So long as you're able to demonstrate this is an actual expense, you should be able to claim that expense, even if there's no supporting e-teams. And what would happen in such a scenario is where once KRA reviews, I'm looking at it that based on previous cases that we've defended, that once KRA reviews and sees that these costs are not supported, you go now to the tax authority and you demonstrate that indeed it's a legitimate tax deductible expense. Remember, e-teams is supposed to make sure that compliance is easy. However, e-teams is not supposed to come in and disallow or take away expenses that an entrepreneur, that a business or anyone should claim against their taxable revenues.
Thank you so much. I am going through a few more questions, and let me take you back to. Okay, so we have said record keeping. I will keep repeating that because it's something that we need to do. In terms of benefits, what other benefits, non-taxable benefits are there? I know you said meals. I know you said per diem. What other tax benefits can we claim, either as a business owner or as an employee? Let me say as an employee. Is airtime part of it?
Yeah, it's part of it. 70%. Whatever is taxable is 30% of whatever your employer has provided to you. Let me put a caveat here for employees. You are basically a low-hanging fruit. The system for collection of taxes and levies from employees is already there because your employer is the one who's mandated to collect it. So you will be the one who is going to bear the most taxation in the country because the system for collection is there. Once the levies are put in, collection system is easy and KRA does not have to incur any extra costs to be able to collect more taxes. So for employees going forward, I'm looking at it as death by taxes. Having said that, there's the various benefits that are there. So we talked about you go for out of office, so per diem of 2,000 per night. We talked about mobile and internet, where you 30% of that amount will be added back and taxed. We've talked about mileage costs based on the AA rates. Any non-cash benefit of less than 3,000, you can claim that. We talked about meals being provided of 4,000 for each employee. There is pension contributions. There is a relief for personal relief of 2,400. There's also insurance if you're paying any premiums, 15% of the premium amount or up to 60,000 annually, whichever is higher is lower. So there's post-retirement medical relief, which comes in from next year, and this is 50% of the contribution or 60,000, whichever is higher. So for employees, that's what more or less would be claimable for you. But for business, anyone who's incorporated as a business, there's so much expenses that you can claim. So long as you can be able to demonstrate that it's business costs. So for example, marketing cost. If I come and meet Vasili Africa for coffee at Java, I'll make sure I'll take that invoice and it will be claimable because we're talking about business for it. So any marketing cost, don't call it entertainment or meals and such. It's basically marketing, your business. Depending on where you're stationed, if you're using your house, make sure part of the rent, part of the utilities are claimed as part of your business costs. If you lend any money to your business, claim an interest. Remember, the interest will be at a lower rate of 15%. So there are various expenses. It all depends on what type of business you have and how you do your records. I go back to that. For any business, if you keep records, most of the expenses, you're going to be able to claim them as business costs.
So, okay. So I'm putting it as an entrepreneur out there. I work from home. My business pays. No, I am bootstrapping. So when I'm bootstrapping, I have loaned money to the business, literally. So I claim interest from it. Then I'm working from home. My business pays my rent, perhaps part of my rent. My business pays my airtime and maybe pays my internet cost. So that goes into the company expenses when you're filing your returns.
Part of it. Remember, if you're claiming all these expenses, the rent that you're paying, most likely you're going to have a home office. You're going to have bought in some furniture, you have your laptop or whichever tool of trade you're using, maybe a printer, the desks, like I've said, the furniture, part of the internet, because you're using it for your business. It's not going to be full. Then there's going also to be utilities, power, water, coffees, and such expenses. As long as it's a portion of it, because when you're seated there, it's you're working towards your business. Then the second part in terms of structuring, anyone who's running their business, ideally you should not be drawing a salary, because if you draw a salary, I know entrepreneurs, the first rule that you're taught is pay yourself first. But that does not mean that you should pay yourself through salaries. Because if you put yourself as a salaried owner, remember you're going to pay all these levies that are there. But if you pay yourself through other means, it could be drawings, for example, which are not periodic. They're going to be disallowed and be taxable on the business. It could be that you need to pay for, I don't know, your club memberships and such. So the business pays for it. Instead of the money coming to you, it's taxed and then you pay. Let the business be the one that is incurring that, especially for when the businesses have tax losses. So it's an issue of cash flow versus also making sure that you do not pay taxes sooner. Again, cash flow as well. So let's assume that you're in a profitable position. If you do draw periodically, so it's not on a monthly basis, quarterly or one-off depending on your needs, and then you disallow that expense on the business. Remember, the business pays its taxes after the year end.
Okay.
Employees paying every month, and then for an employee, again, death by taxes. All these levies are on you. So it's so long as, and I go back to this, whatever I state here, you need to go sit with your advisor and make sure that you get proper advice. Whatever I state is, it's not professional advice. It's whatever I'm stating is what is there in market. So before you implement, speak to an advisor. You can come to us. We can be able to structure it for you properly, or your auditor, or your accountant, or your legal advisor, so that you make sure when you put it in, you've done it within the law. Because that's the catch. That there's all these ways of making sure that you can reduce your taxable
Tax
income.
liability, yeah.
But you need to make sure that you do it right. So speak to an advisor. Most of them, because it's the scope is quite low. If you come to me, entrepreneur. I'm also an entrepreneur. I've been there. I've experienced it.
Tatufanyia free.
For Vasili clients, definitely.
Thank you so much. Someone has asked, what are your fees? So you'll answer that. Then how do you apportion the rent to charge businesses when one is working from home? I think that's Joseph, that I think someone has answered it. It really depends on the kind of space that you're using, perhaps. Yeah, I guess.
Yeah, so you can look at. I have a 2-bedroom. I'm taking 1 bedroom, so utilize it depending on maybe the square, what is it called, square meters or square footage. I'm not clear on that. How big is the space versus whatever you have, and then you apportion. So to an accountant again. In terms of my fees, it's depending on the scope. So it will be how we work is that if you have a matter, you come to us. The first meeting, I'm not going to bill you anything because it's a scoping meeting. We just want to understand what are your needs and what is the value that we can provide to your business. So after that, then after we scope, we've agreed this is it. Then from there, we will structure now a fee that meets your needs. So it's based on client by client. I don't have a rate card, although there is a rate card depending on whatever more typical rates are. You can reach out to us and we can provide you with a rate card. But for most small businesses and for startups, I'll say go to our website. We have an online platform for small businesses and individuals. It's called easytax.co.ke, and you'll be able to see very well friendly prices as opposed to the more tax consultancies for under tax rates, which is mostly for big businesses and high net worth individuals.
So you've said easytax.co.ke.
Yes, easytax.co.ke. You'll find everything there with all the rates provided for. It's very good for the retail market, definitely.
All right. I hope, Satima, you've gotten it. All right. I think we've answered all the questions that are in the chat box. So what are the emerging trends? I know we are 8 minutes past the hour, but what are the emerging trends? How can we be able to, I keep saying, yeah, lower our tax liability, but how can we be able to be more tax compliant? And what are we foreseeing in the future? I know, as I said, as we started, today we think that we have gotten it worse, more levies and more charges and more taxes. And then tomorrow the government wakes up and decides, you know what, hamjakipata bado, let's hit them up again, yeah? You get surprised every day. You don't even know what to say by the way. At this moment, we're just winging it as Kenyans. So, and I saw yesterday someone on Twitter write to the US Embassy and said, I am not straight. You know what that means? I am not straight and I'm seeking asylum and I'm under oppression in Kenya. You know, because they just needed to run away from this country. Yeah. So the question is, what are we foreseeing? How can we be more tax compliant? As you said, yes, records, but at this moment, Sam, as an individual and as a business, where are we headed?
Definitely more taxes are coming. If you look at the medium-term paper that the National Treasury put in, and also the requests that have gone into the market in terms of the budget making process for finance, basically the finance bill for 2024. The proposals are geared towards making sure that there's more revenue collection, tax revenue collections. And for good reasons, because as a country we do need that, so that now we're able to meet our debts and our obligations as a nation. However, you're dealing with quite a very effective tax authority. The tax authority, the National Treasury, the National Assembly, the administration, they are very well drilled machine, if I can call it that way. They're able to pass laws faster and more effectively with least resistance as opposed to previous regimes. So if you're dealing with such, then from your side, then you have to make sure you're also drilled properly. Now, when it comes to tax planning, is now looking at the laws and seeing how to make sure that you take advantage of what the laws are coming in and what are the current laws. So, for example, one of the items that we've seen and which people are always afraid of is refunds. For most employees and most people, if you look at your PIN, most likely you have some refunds. You have some overpayments that are sitting there. Not a lot of people go for it. Why? Because you're afraid of carrying. Why then when you're afraid of carrying? We're just starting from the basics before I build it up. So go for those tax credits in terms of how you prepare your financials. Structuring. When I talk about structuring, for each transactions that you undertake, it's important that you speak to an advisor, even if it's a friend or someone who you trust, so that they can guide you on how to do it. Most people, you get excited because you've gotten a deal and you don't really structure it properly. For employees, there's not much you can do because the room for it is quite low. So the best you can do there is work really hard and get promoted and earn more, basically. But for a business owner, you have much more. It depends on what is the transactions that you're doing, how you're set up from the beginning, your record keeping itself, and who your advisors are. Please speak to competent advisors who will take you through how to structure. There's various ways of structuring. Some of them I cannot speak to them right now. For that, I'll have to charge you a fee, unfortunately. So that now I can show you how to make sure that you save on each transaction that you do. But what are the mechanisms that are available to you? There's a lot of public participation when it comes to, in the last year, that's what has happened, as people get to know that all these things are impacting you. So make submissions to National Treasury so that your voice is heard. You can make it through most or service providers. What they do in this space is that they'll send out requests that you put in your proposal. What is that item in the law that is affecting you? Join industry players that come together. So look at it this way. Minimum tax was defeated by, was it called Tengela bar owners? They're the first ones that got the ruling against minimum tax. So they were able to fight it at High Court. And later on, all these other associations came in, the Flour Council, KAM, retail trade associations and such. So if you come together, look at what are the industry players in your area or in your profession, in your industry, and join, please, because so long as you're together, you're able to exchange ideas and be able to impact the lawmaking process. And if everything fails, there's the court process that you're able to take matters to court. This tax controversy, basically tax controversy builds on tax planning, where you look at a law and see how do I make sure that I pay the least amount of taxes. Top of mind I can give is, let's say you're in real estate, you're in the business of selling properties and such. One of the structure which now is not effective that people are using is that you put a property under a company, and instead of selling the property, which you pay taxes on the value that you've gained, top of mind, let's give an example. I have a building, I've put it under a company, Vasili wants to buy it. I tell Vasili, instead of buying the property, why don't you buy the company? So what Vasili will do is they'll buy my shares at nominal rates, and I'll declare that Vasili has taken the company, but I'll not declare the gain. So if the property was worth 5 million, Vasili has paid me 10. Whatever I'm declaring is that I've sold my shares at cost, which will be maybe the nominal 100,000. So most of the time you've not made a gain. So CGT is quite low. Again, I go back, that structure is not effective anymore. You'll need to speak to an advisor to be able now to utilize it. This is just one of the examples I'm looking at it and saying there's any law that comes in, there's always a way to, I'm not calling it beat it, but there's always a view to be more efficient, more effective. With taxes hitting or eating at least 30% of your income, definitely is a big ticket item, most likely the biggest expense as a business. And with an aggressive tax authority implementing the law, then it's the biggest risk, most likely, that faces your business. So from tax compliance, like we said, from records, tax planning, staying within the law, and also tax controversy, which is still within the law. Remember, KRA is also doing tax controversy. Look at it. They're the ones who have done the most controversial interpretation of the law. And I'll just go through a few. So one of them, exported services. When KRA lost all these cases relating to how exported services should be treated, they amended the law. Where they said instead of it being zero rated, now let it be standard rated. Yeah, KRA had gone to interpret that an exported service should be vatable. Basically, I'm providing a service to an non-resident, and they're saying that I should charge VAT on it. That's tax controversy. You look at an item and say, I want to get more taxes. There's a reversal of agreed upon exemptions. Everyone has heard about the NCBA merger, EABL, and London distillers having tax disputes because there was some tax breaks that they were provided, but KRA again has come back and gone after it and tried to reverse that. That's tax controversy. Basically, you're looking at it and saying, can I get more? Which other item can I look at? Proposal on minimum tax.
The 500 USD on personal effects.
Remember, the 500 USD is in law, and it's a community law. It's the East African Customs Management Act. So it's EAC. It's not only Kenya. There, I would the only thing
they're just implementing what has been in law.
Correct. They're just implementing what has been in law. So
Okay.
all that has already been there. It's just that it was never implemented. So again, the manner of implementation a bit aggressive, but most likely it will tone down as things continue. But if you look at all these things, the KRA is controversial, if I can call it that way, quote unquote. They are really trying to meet their targets by looking at how do I implement the current law, interpret it in a certain way that I'm able to get more. So if KRA is doing, then what is good for the goose is also good for the gander. So where are the taxpayers not applying tax controversy? And they are. It's there. Most businesses are going to have a tax management system, and they're going to be able to see this is the laws that are affecting my business, and this is how I'm going to go after it, making sure that I pay the least amount of taxes, but also making sure that I'm compliant. For you to do that, the basic level, like I said, make sure you have proper records, make sure your ledgers are clean, make sure you do not have any inconsistencies between whatever you're reporting as a business versus whatever has been reported in your VAT, in your PAYE, in your basically your monthly returns and annual returns have to tally. So basic things that you need to make, and then from there get to tax planning, get to tax controls.
Okay. I have a question, Sam. In terms of record keeping, do you have a system under TaxWise where people can actually just see the kind of records that they need to keep? Maybe even if they're doing it on their own, probably they can't be able to hire an advisor or something of the sort, or someone of the sort. They can be able to see if it's pay, I have paid, they have a checkbox.
Yes, we can be able to provide basically a guide.
Okay.
I'll have that ready at least for FY 2024, so
Okay.
that it will be available on our website and you can be able to see. So
Yeah, that would be nice.
Remember, record keeping doesn't mean that you have to get a system. Basic Excel will be able to keep your records properly, especially at the beginning of the stages. And that's how businesses are built. After that, you go to QuickBooks, you go to Sage, you go to SAP as you become a Pan-African business.
The thing is, when you're starting a business, especially when you're an entrepreneur, it's your first business that you're starting, you don't know. You do not know. You don't know what to keep, where to keep it. So at least with a guidance, someone can be able to see, yes, if I pay for my website, I need to write that, who I paid, whether I paid them with VAT or not. The kind of invoices. Brings me to a question that right now, I think what happened this week, I don't know whether, I think we answered it when we were beginning. Even companies that don't have VAT, are not vatable, are supposed to be issuing invoices via e-Teams.
Correct. And remember, this is not a new thing. If you look at other countries that are far less developed than Kenya, those systems are already there. I believe Uganda already has it.
Yeah.
A few years back, I had opportunity to go to Mozambique, and what you'll find is that even your Kibanda, they have a POS system that now generates a tax invoice. So the issue of e-Teams, at least KRA has made sure that the software is free. You go with your machine and it's installed. But
Okay.
e-Teams you should not really be scared of it. It's just a matter of making sure of record keeping. It even help you to keep proper track of your revenues, your costs. But of course, the first year I'm expecting that there's going to be teething problems. And so long as I go back to section 1516, so long as an expense has been incurred wholly and exclusively of generation of taxable income, that expense is deductible, so long as you can be able to demonstrate why it was not on e-Teams, for example. So if you're buying Mboga for now, you buy your groceries from her, most likely she's not yet registered, so she'll give you a receipt. You paid by M-Pesa, so you have the proof of payment to show that this is a legitimate cost.
Okay. So what happens to service industry, people like who are in coaching, career coaching, me and you?
So you will need to get that e-Teams. So it's just on your laptop. You go to your compliance officer in KRA, depending on which station that you're in, and they're going to install it. It's such a quick thing, and then they're going to be generating invoices. And for most small businesses, and most people have some side hustles as well. Remember all this anyway, when you provide such services, they always withhold. So withholding tax is always appearing at the end of the year and you declare it as part of your income. Yes. So what is happening right now is just to make sure that KRA can be able to see a bit more clearly how much you're billing, and for record keeping will be easy for you.
Okay. All right. I don't know whether there are any other questions. They're still coming on the email, so I'll shoot them to you so that we can be able to almost do a Q&A. An FAQ, frequently asked questions, they can guide. But I'll send them to you on email as they come as well. I know we have been requested to share the recording. We shall share it. We are 25 minutes on top of the hour, and what we had decided, we had said 1 hour, but I think this is a conversation that needs tununulie some nyama na kahawa, and then we just sit down with him in a round fire and then we just talk. Yeah. He can share his insight and we can share our frustrations if that is the way to go. Yeah, if that's a word to use right now. But yes, please keep the questions coming. You can get in touch with Sam. Sam, kindly type your contacts and your email address or how you'd want to be reached on the chat box. Our email is still info@vasiliafrica.com. You can reach us. You can follow us on social media. You can share this conversation with your friend. It's actually live on Facebook at the moment, so you can share it with your friends. See whether it's a conversation that can be used somewhere else. But if you need us to do it again, please let us know so that we can have one probably the beginning of the year or one just before Christmas, kabla Sam hajaenda holiday na pesa yetu ya consultancy. Yeah. Yes.
So, so parting shots as I go, for any entrepreneur, I don't think tax is something, so long as you have a proper management system, it's, of course, it's scary because it's a big item in terms of cost. And if you're not compliant, KRA is going to clamp on you quite aggressively. But what we've seen with the tax authority, so long as you keep the avenues for communication open, so ensure that the PIN, your PIN that it's registered, you monitor your email that is registered to that PIN, and also you have your telephone number there so they can reach you in case of any issue. You know your compliance officer, you know your debt officer, so that in case of any issue that comes up, they are also tenants, so they'll listen to you, and you put in your issue in writing in proper way. They'll always help you. So KRA has become more of not an authority but service provider, honestly. But having said that, of course, they're trying to collect more taxes, and you do need to make sure that you protect your business. So speak to advisors, have a discussion with them on any item that you want to look at. If you're doing any investment, please speak to an advisor. They'll save you a bundle. You might make a mistake that down the line will cost you so much, and it's so hard to unwind it, as opposed to by the time you're making any investment, you speak to an advisor. That's what all the top guys are doing anyway. All the big businesses, they'll speak to their lawyers, they'll speak to their tax advisors, they'll speak to their auditors. The auditors, all those will give their opinions, which will be reviewed to make sure by the time they're investing or going through any transaction, that it's done in the proper way and in the most tax efficient way with the least amount of taxes. So also, similar to all investors, all entrepreneurs, take advantage of that.
Thank you so much. And then there is an amnesty up to June or January next year?
It's up to June 2024. So the tax amnesty is for accrued penalties and interest. So the KRA gives you the one hand and takes you the other, and I'll explain. So the tax amnesty, the way it has come up is that if you've incurred any penalties and interest up to December FY22, that is 22 December going backwards, all those penalties and interest, so long as the principal tax has been paid, will be wiped off your ledger. So your ledger will be clean. So you'll be easily get your TCCs and be able to be compliant. But anything from January 2023 going forward, they've deleted the provisions relating to tax penalties and interest waiver. So you cannot get a waiver of penalties and interest going forward unless there's an amendment that will be introduced. Or tax abandonment. There was those clauses that in case of a difficulty in collecting, some taxes could be abandoned by the tax authority. So that those clauses have been removed. So take advantage of the tax amnesty. If you have some principal tax, go to your tax advisor or go directly to the KRA and agree on a payment plan. This one will run from September 1st, 2023, which has already passed, all the way to June
2020.
So you still have time. For any new business or any ongoing business, you can do a top-down, basically do a health check on your operations, just to check if you have any tax issues. And those tax issues, if there's any principal tax, you pay, and then for penalties and interest is fully waived. Here will give you a payment plan. Typically, they'll give you 6 months, but so long as you're making a payment, they're not too aggressive in implementing the payment plan, so long as you're a tax compliant taxpayer, which I believe most Kenyans are.
All right. Okay, thank you so much, Sam. Oh wow, we said yes. You're doing vote of. I was doing vote of thanks. You were doing the last, and then yes, something else came up. But yeah, tunasonga mbele. These questions will keep coming. Thank you so much for everybody who's joined us. I know there are people who dropped off along the way. There are people on the Facebook. There are people who've said we share the recording. It will be shared. Asanteni sana for joining us. Keep your questions coming. As Sam has said, for all our clients, if you go through Vasili, you get the first 2-3 consultancy free. Just the first one.
Remember, consultancy is not just the first meeting. It's going to be the first meeting, second, and then implementation. So
yes, everything, the work, you will pay for the work, but for them to learn you, yes, they will not charge you. So karibuni sana. I hope we engage them as much as possible. I know for sure we are going to engage them because we are in that tax bracket where you don't know where you lie as a company. So yeah, and I like what you said, Sam, in the beginning. For service industry, you can consider, if you're considering starting a business, you can consider an LLP, limited liability partnership. For goods, you can consider doing a company instead. Yeah, so that's something to be, so that you can at least have a lesser tax burden. Yeah, thank you so much, Sam. Asante. Yes. Thank you. Yes, asanteni sana. Have a good evening. Probably until next year. See you again. Thank you.